Oil prices fell by more than $1 a barrel on Monday as investors took profits after recent gains and awaited details of expected new U.S. sanctions on Iran. Brent crude futures fell $1.16, or 1.23% to $93.23 a barrel, while U.S. West Texas Intermediate crude dropped $1.55, or 1.78% to $85.51. Both benchmarks had recorded a second consecutive weekly gain last week, rising more than 5%, as negotiations between the United States and Iran stalled and oil shipments through the Strait of Hormuz were constrained. U.S. Treasury Secretary Scott Bessent was due to announce new sanctions on Iran on Monday and had threatened what he described as the toughest sanctions in history. President Donald Trump has also threatened sanctions on Iran's trading partners. Iran has condemned the planned sanctions, while President Masoud Pezeshkian has called for a diplomatic solution. Pakistan's army chief was also visiting Tehran for mediation talks ahead of the U.S. announcement. Shipping data showed that fewer than 20 commodity vessels transited the Strait of Hormuz over the weekend, as Iranian and U.S. blockades restricted traffic through the key energy route. However, Iran granted permission for a number of Iraqi oil tankers to pass through the strait following repeated requests from Baghdad. SEB analyst Jaron Skieldrop said the Brent price of around $93 suggested that enough oil was still flowing through the Strait of Hormuz and the Persian Gulf. He said a turning point could come if Iran decided to close the strait using rockets and drones. Meanwhile, Morgan Stanley said Brent had risen to around $92 a barrel from as low as $71 in June, driven by inventory declines and growing expectations that disruptions in the Middle East could last longer. The bank raised its Brent forecast and projected prices could peak at $100 a barrel in the fourth quarter. The International Energy Agency, meanwhile, said it was not currently discussing a second release of oil from strategic reserves.